Hey everyone, welcome back to Stocks Telegraph. Today we're talking about enCore Energy Corporation, ticker EU, a company making big moves in the uranium industry. With the world pushing for clean energy and nuclear power, enCore is positioning itself to be a major player. So, how's the stock doing? Is it a good pick for your portfolio? Stick around and we'll break it all down. Before we dive in, don't forget to hit that subscribe button and ring the bell so you never miss an update. If you enjoy this video, drop a thumbs up and let us know your thoughts in the comments. Feel free to share this with anyone interested in enCore and the uranium market. Let's get into it. All right, first things first. Let's talk stock price. As of now, enCore Energy Corporation is trading at $3.38 per share. Now, at first glance, that might not seem like a lot, but hold on, it gets interesting. Analysts are eyeing a target price of $6.19, which means there's an 83% upside from where it's currently sitting. That's pretty promising, right? Now, here's the deal. Analysts have given enCore a strong buy rating. And if you're like me, when I hear strong buy, it definitely catches my attention. It's a pretty solid sign that experts are bullish on this stock. If you're looking for some confidence in a stock, that strong buy recommendation is one to pay attention to. In the last week, enCore saw a modest bump of 0.60%. I know it's not huge, but keep in mind, this is part of a bigger upward trend. The stock is still about 33% off its 52-week high, which means there's still plenty of room for growth as it potentially bounces back. So if you're looking for a stock that might be ready for a recovery, this could be one to keep an eye on. Now let's talk about enCore's financial health. And trust me, this is where it gets really exciting. The company has a super low debt-to-equity ratio of just 0.06. For those who don't know, this is a really positive indicator. Basically, it means that enCore is in great financial shape. They're not over-leveraged with debt to fuel their growth. This is especially great for long-term investors, as low debt makes a company more stable and less risky. You definitely want to see this when you're thinking about the potential for growth. Now, let's talk about some of the big moves enCore has been making lately. One of the biggest announcements is that starting January 1st, 2025, enCore is changing its status with the U.S. Securities and Exchange Commission from a foreign filer to a U.S. domestic filer. What does that mean? Well, in simple terms, it means that enCore will start filing its annual and quarterly reports just like any other U.S.-based company. This is a big step in making enCore more transparent and accessible to investors in the U.S. market. If you've been waiting for more clarity on enCore's financials, this is a huge step in the right direction. On top of that, enCore has appointed KPMG LLP as its new auditor, which shows they're serious about maintaining high standards of corporate governance. This is another step toward building trust with investors and keeping things above board. So, it's safe to say they're making moves to increase transparency and instill more confidence. But hold up, here's something even more exciting. enCore just acquired 5.2 million units of Nuclear Fuels Incorporated for $2.8 million. This gives them a 17% stake in Nuclear Fuels, which is a big deal. Why? Well, it gives enCore exposure to the growing nuclear energy market. As the world continues to demand cleaner energy, this investment could be a game changer in the long run. Now let's dig into enCore's recent financial results. For the first 9 months of 2024, enCore has seen strong revenue growth, mostly driven by uranium extraction and the sale of yellowcake. That's concentrated uranium, by the way. This is a huge indicator that enCore's uranium business is running at full capacity. One of the biggest milestones for enCore this year was the commissioning of its Alta Mesa in-situ recovery uranium central processing plant and well field. This is a major deal because it makes enCore the only company in the U.S. with 2 operational uranium processing plants. That gives them a serious advantage in uranium production, positioning them perfectly to meet the growing demand for nuclear power. In terms of revenue, enCore generated $45 million from yellowcake sales in the first 9 months of 2024. Over 100,000 pounds of yellowcake were extracted and packaged, solidifying enCore's role in the uranium supply chain. They've also locked in long-term supply contracts with U.S. nuclear utilities, including a deal to deliver 300,000 pounds of yellowcake in 2028 and 2029. This kind of long-term stability is crucial for ensuring a steady demand for enCore's products. Looking ahead, enCore is definitely not slowing down. They're planning to ramp up production and are aiming to process over 1 million pounds of uranium annually by 2025. That's a huge increase and shows they're serious about scaling up to meet rising demand. One major project in the pipeline is the Upper Spring Creek project in South Texas. The company is drilling to confirm uranium mineralization for its next well field, and they've already received permits to move forward. If all goes according to plan, this could be a big revenue generator for enCore in the next few years. They're also working on building a satellite ion exchange facility to support their Rosita Central Processing Plant, which is set to come online in 2025. All of this expansion is part of enCore's strategy to boost production and meet the growing demand for uranium. Let's talk about the bigger picture. The global demand for uranium is on the rise, driven by the growing interest in nuclear energy as a cleaner alternative to fossil fuels. On top of that, geopolitical factors are creating a supply crunch in uranium production, which is a golden opportunity for companies like enCore that can provide secure, reliable uranium supplies. Thanks to enCore's smart contracting strategy, they've been able to lock in long-term contracts at favorable prices. With uranium prices expected to stay elevated, enCore is well positioned to benefit from these high prices and the increasing demand for nuclear power. So, what's the bottom line on enCore Energy Corporation? This company is in a strong position to benefit from the rising demand for uranium and nuclear energy. With its low debt, solid revenue growth, and smart strategic investments, enCore is showing a lot of potential for long-term success. As the world continues to push toward cleaner energy, enCore is definitely one to watch in the uranium space. If you're thinking about investing in enCore, it looks like a solid stock to keep an eye on, especially with their strong growth plans and favorable market conditions. Of course, as always, make sure you do your own research and consult with a financial advisor before making any big investment decisions. That's all for today's video on enCore Energy. If you found this video helpful, don't forget to hit that like button, subscribe to Stocks Telegraph for more updates, and let us know your thoughts in the comments below. We'd love to hear what you think about enCore's future. And hey, share this video with anyone who might find it useful. Thanks for watching, and we'll see you in the next one.